keep you updated on the capital and financial markets. Here is a recap of what happened. The Securities Commission Malaysia issued the Guidelines on Technology Risk Management, which aims to promote robust and sound technology risk management practices among capital market entities. The guidelines also sets out the SC's expectations on capital market entities when they manage their technology risk. In formulating the guidelines, the SC has taken into account feedback received from the public consultation paper on the proposed regulatory framework on technology risk management, which was published last year. Among the requirements set out in the guidelines include the establishment and implementation of an effective technology risk framework, technology project management, technology service provider management and cybersecurity management by capital market entities. The guidelines will be applicable to all capital market entities licensed, registered, approved, recognized or authorized by the SC. Hong Kong's Mandatory Provident Fund Supervisor lauded the 1.11 trillion Hong Kong dollars retirement scheme for excelling, in many ways, by international standards, noting also that fees have dropped over the years due to continual reform. The Mandatory Provident Fund Scheme Authority has striven to adhere to the people-based principle, putting scheme members' interests first, according to Chairman Aisha McPherson Lau. It has pursued continual reforms, including improving the investment framework and reducing fee levels, so that the MPF system can better meet the expectations of scheme members and deliver better retirement outcomes for them, she says in a statement on the 30th of July, released together with the MPFA's annual report for its financial year ended the 31st of March. The average fund expense ratio for the MPF as of March was 1.33%. Down from 2.1% in 2007. The Securities and Exchange Board of India could soften its previous proposal of imposing a standard investor fee on mutual funds. The market regulator is considering a revised discussion paper, which is likely to be released in the coming weeks, with two options. In its initial proposal released on the 18th of May 2023, SEBI allowed mutual fund houses to charge a maximum fee of 2.55% of the assets under management, covering all expenses, including brokerage costs. TER is a percentage that represents the expenses charged by a mutual fund house to investors, covering administrative and management costs. However, this proposal faced opposition from the industry, which argued that it would significantly reduce the profitability of asset management companies by 20% to 80%. For some of the world's largest asset managers, it seems climate targets are not worth the paper they're written on. A new analysis by UK-based think tank Influence Map of the 45 biggest asset managers, which collectively hold $72 trillion in assets under management, found that many are not only far off track from meeting their climate goals, they have regressed. While most have set net zero targets, nearly all of the equity fund portfolios that were assessed, some 95%, are misaligned with the goal of net zero emissions by 2050 that much of the world is chasing, as a tipping point in climate appears ever nearer. Late last month, amid rolling heat waves in Europe and scorching wildfires in North America, United Nations Secretary-General Antonio Guterres declared that the era of global boiling was upon us. Climate change is here. It is terrifying. And it is just the beginning, said Guterres, on the same day that scientists announced that July 2023 was tracking to be the hottest month ever recorded in human history. It is still possible to limit global temperature rise to 1.5 Celsius and avoid the very worst of climate change. But only with dramatic, immediate climate action. This message has yet to get through to those who hold the global purse strings, it seems. Malaysia has emerged with notable resilience and a potential for recovery amid the challenges brought about by the COVID-19 pandemic, said the World Bank. In its report, Building Malaysia's Resilience, Lessons from COVID-19's Economic Impacts and Policy Responses, The World Bank said Malaysia led the way in a survey which included Cambodia, Indonesia, Mongolia, the Philippines and Vietnam. The survey examines the economic consequences and government responses to the pandemic in the 6 economies. The 6 experienced the crisis differently and implemented various measures to contain the spread of the virus and to mitigate economic impacts with varying degrees of success, the bank noted. FIMM is pleased to announce the release of its annual report 2022 with the theme, "In the Grand Scheme of Things." Visit FIMM's official website to download a digital copy. The latest e-zine is now available for download at FIMM's official website. This edition features articles on the usage of social media for investment marketing, an introduction to vulnerable investors as well as the recent Global Money Week. Download your copy today and stay informed about the latest developments in the industry. This has been the FIMM TV Weekly Recap. Be informed, stay updated. Be sure to like, share and subscribe.